suddenly a lot of asset classes have become disjointed. Crude is down, copper is up, gold is up, and Bitcoin is giving gold some company. Why is that this time around in this financial risk-off moment, we have seen a very disjointed move in all financial assets?
Yes, that's right. It's very disjointed, but it does make a lot of sense because if you're afraid of your deposit in the bank, where do you go? Do you go into stocks? Not really, because people feel that maybe the stock market will not do well if the inflation numbers go up and the Fed becomes more aggressive on interest rate increases. So if you look around, okay, what's the place to go? It's gold and maybe Bitcoin because they feel Bitcoin may not be affected by these other factors.
Mark, Indian markets are down 20% from the high in dollar terms. Chinese markets are down 45% from the in dollar terms. Obviously, that makes China much more attractive. And that narrative, I guess, has been at play in last couple of months. Do you think this narrative of book profits out of India and move to China is real?
No, I think what's happened is that you've seen some recovery in China because China now has opened up more. The COVID situation has pretty much been suppressed. And now the Chinese government is saying, look, we welcome foreign investment, and therefore they're, trying to encourage more investment in China. But it really has not worked very well because you can see the Chinese market has come down. And the reason for that, of course, is that the biggest market makers in China are the local people who invest in the stock market. If they're not confident or if they don't have the money to put into the market, then the market will not do very well. And of course, that affects the emerging markets index because China is about 30% of the index.